The US-China trade war has escalated to a new level of tension. Former President Donald Trump's latest round of tariff threats has drawn sharp criticism from Beijing. China has labeled these new tariffs as not only detrimental to the global economy, but also a strategic miscalculation. The world watches with bated breath as these two economic titans engage in a high-stakes standoff. The ramifications of this trade war are far-reaching, impacting businesses and consumers on a global scale. Trump's decision to impose a new wave of tariffs on Chinese goods has been met with strong opposition from businesses and even some members of his own party. They argue that these tariffs will ultimately harm American consumers and businesses by increasing prices and disrupting supply chains. The tariffs are seen by many as a political maneuver rather than a sound economic strategy. Despite the warnings, Trump remains resolute in his belief that these tariffs are necessary to protect American jobs and intellectual property. He has accused China of unfair trade practices, including intellectual property theft and forced technology transfer. His administration argues that these tariffs are a necessary tool to bring China to the negotiating table and force them to make concessions. However, China has shown no signs of backing down. They have responded with retaliatory tariffs of their own, targeting key American exports like soybeans and automobiles. The Chinese government has accused the US of protectionism and bullying, arguing that they are willing to negotiate, but not under duress. China's response has been swift and calculated. Instead of bowing to pressure, Beijing has strategically positioned itself as a champion of free trade and a stable global partner. This approach aims to contrast with what China portrays as US unilateralism. By presenting a calm and collected front, China seeks to reassure its trading partners and attract those disillusioned with US trade policies. Beijing wasted no time in retaliating against US tariff measures. Punitive tariffs on a range of US goods and firms were swiftly enacted. This calculated response underscores China's determination to protect its interests and sends a clear message that they will not be bullied. The move also highlights China's growing economic clout and its ability to withstand external pressure. China has also been actively strengthening ties with other key economies like Japan, South Korea, and the European Union. These efforts aim to forge new economic alliances and reduce reliance on the US market. China's proactive diplomacy seeks to build a united front against protectionist policies and promote a more inclusive global trade order. This strategic maneuver is not without its risks. The escalating trade war threatens to further destabilize the global economy and push the world towards a recession. However, China seems to be betting that it can weather the storm better than the US and emerge from this crisis as a stronger global leader. The ongoing trade war has sent shockwaves through the global economy, creating uncertainty and volatility in markets worldwide. As the US and China, the world's two largest economies, engage in a tit-for-tat tariff battle, other countries are caught in the crossfire. This situation has forced countries to re-evaluate their trade relationships and seek new partnerships to mitigate the impact of the trade war. The European Union, caught between its two largest trading partners, has been forced to walk a tightrope. While critical of Trump's protectionist policies, the EU also shares some of the US's concerns about Chinese trade practices. The EU has responded with retaliatory tariffs of its own on US goods, while simultaneously seeking to strengthen trade ties with China. Southeast Asian nations, heavily reliant on trade with both the US and China, have been hit particularly hard. The trade war has disrupted supply chains and created uncertainty for businesses in the region. This situation has led some Southeast Asian countries to explore closer economic ties with China as a way to reduce their dependence on the US market. The trade war has also accelerated the trend of deglobalization, as businesses become more cautious about investing in overseas markets. This trend towards protectionism and regionalism threatens to undermine the rules-based trading system that has underpinned global prosperity for decades. As the trade war drags on, the potential for a new global order emerges. One where China, not the US, takes the lead in shaping the rules of global commerce. China's ambitious Belt and Road Initiative, which aims to connect Asia, Africa, and Europe through infrastructure investments, could further solidify its position as a central player in global trade. This shift in the global balance of power has profound implications for the future. A multipolar world with multiple centers of power could lead to greater competition and instability. Alternatively, it could usher in an era of greater cooperation and shared prosperity if managed effectively. The outcome of this trade war will depend on a multitude of factors, including the willingness of both sides to compromise, the response of other major economies, and the impact on global growth. The stakes are high, and the world is watching closely as this economic drama unfolds. The future of the global order hangs in the balance. Whether the current trade tensions escalate into a full-blown trade war or pave the way for a more equitable and balanced trading system remains to be seen. What is certain is that the outcome of this economic standoff will have far-reaching consequences for the global economy and the geopolitical landscape for years to come. If you like this video, please like, share and subscribe to The Silent Observer for more daily updates.